In August 2015, the American Accounting Association and its Centers for Advancing Accounting held a meeting in New York City titled Accounting is Big Data. They placed this as a challenge, and people at first thought, accounting is big data? And perhaps even accounting is big data. And this short video is designed to share the insights behind this concept and to invite you to join a conversation to move further. The first thing we have to do is to have a common understanding of what accounting is. And so the picture on the screen was developed by the Pathways Commission and represents what accounting is to the profession. It's not simple black and white, debits, credits, yes, no, the people with the green eye shade in the back room. But to be a successful accountant, you really have to provide useful information that's used by senior management in order to make good decisions. When accountants are successful, the accounting information that they provide leads to a prosperous society. It also leads to consequences throughout the organization. And so if you want to be a good accountant, you need to understand the economic reality of the entity in which you're working, whether that's a small mom and pop organization or a large governmental organization. But you have to understand what's happening within that organization and its environment, because lots of information is being generated, lots of data, and it's not just black and white data, there's many shades of gray. And so what the accountant does most of its time is put on its critical thinking cap to apply accounting judgments to that data in order to make useful information. Some of that useful information is going to be tabular, like the financial statements, but more and more information is being shared in graphical fashions with combinations of financial and non-financial data in order to really understand all of the background behind decisions. Accountants are helping management make data-driven decisions that again will benefit the firm, society, and have implications back throughout the life cycle of an organization. So to be an accountant, you really have to have a great understanding of business. That's the foundation upon which accounting works. Because if you have an understanding of business, then you have the ability to ask great questions about how to do things better, and an understanding of the data that's being created so that you can identify what data is available, how can you gather that data, and then how do you transform it into meaningful information that you can successfully communicate to the senior leadership and take a chair at that table as decisions are getting made. So accounting really is a rich business discipline that's helping to make good decisions. And big data is going to have an impact on it. So let's look about how that impact could happen. Let's start with an accounting statement. So this is the audited financial statement for Marriott for 2014. And we can focus in and drill down on just even a small part of it, the revenues. What are the revenues for this hotel organization? Well, the income statement focuses on a period of time, and that one that I just showed you is for 2014, and there are a number of different elements within the revenue section of the income statement. And preparing that financial statement is a task that some accountants will perform, but there are many other tasks, and those tasks start way in advance of generating the 2014 revenues. There are accountants who will be forecasting the revenues in order to develop budgets. There will be accountants who are working throughout the year to provide information to management to allow them to manage. And we're in fact going to be forecasting what that year-end revenue figure is throughout the year to determine whether or not we're going to hit our estimates. After the fact, we're also going to continue to analyze the performance within fiscal year 2014. That might be done by auditors who come in to determine whether the financial statements are created in accordance with GAAP. It'll also happen to do performance evaluation to determine where was a firm successful or unsuccessful. And so the life cycle of accounting information is broader than just the audited financial statement. It encompasses more types of data. And in fact, we're seeing with the development of big data that it's broader and broader sets of data. So what really do we mean by big data? I'm going to share some information that was created by Gartner, where they started with the corporate data, the data that organizations have had that is generated internally. Well, even that corporate data is growing significantly. The enterprise resource planning systems are generating more and more data, and in fact, it's happening globally, integrated, and so we're getting wide ranges of data. But it goes beyond that. with the corporate data, there's other operational data, not just the financial data, and there's dark data. And dark data are really the things that are hard to get, but hold really important information. So think about emails and contracts. If you were looking at how could you project what future revenues would be for many organizations, knowing what contracts you have and whether there are any issues with them would of course be valuable. So operational data and enterprise dark data are new subsets of data within corporate data systems. But there's also growing data outside of the organization. Some of that is publicly available, some of it is commercially available, but there's a broad set of data that captures a wide range of phenomena, many of which haven't been thought of as having an implication on accounting in the past. So all of this data together is pretty different than the structured, controllable data that organizations have been used to using. And so this is a graphic that was developed by IBM that explains 4 ways that this big data is different from what we've used in the past. So obviously there's an issue of volume. There's a much bigger scale of data that's being generated. But in addition to just the volume, there's the velocity, how fast it's coming. More and more devices have sensors in them, and those sensors are continuously generating data about the environment in which they're located. So there's a constant stream of data that's happening all the time. There's also a wide variety of data, and so it isn't the simple structured data that's in an enterprise system, but rather it's structured and unstructured data that are getting created outside of the organization in formats that you can't control because you don't have any role in creating the data itself. All of this is leading to more uncertainty about the data. As we use data from outside the organization, it's difficult to know how reliable that data is, and so veracity is the 4th V that IBM has identified. And data from outside the organization and big data are differing on these 4 dimensions. So let's think about how that could enable or transform accounting processes. So again, we're back to the revenue section of the income statement. And we know that we're going to be doing forecasting and managing, but there's a growing role within organizations for predictive analytics, using advanced statistical techniques on those growing internal databases, global, so you're going to have issues with multinational currencies, you're going to be able to drill down to individual cities or products, and you're going to have data that goes over time. So a really rich set of data within an organization, much richer than in the past. But accountants are beginning to reach outside of the organization in order to do these predictive analytics. So there's some evidence that the way to forecast what an individual hotel's occupancy rate will be, which is of course related to its revenues, is to look at the reviews that are being posted on TripAdvisor. The TripAdvisor reviews are an excellent way of predicting what occupancy rates will be for a hotel. Similarly, hotel occupancy rates vary a lot based on weather, and so gathering the weather data would allow us to more quickly update our forecast for what revenue would be over a short period of time. Additionally, we can look at competitor analysis and try to determine what's happening with our competitors. What are the overall forces that are affecting the environment and the market and the industry overall, and what are the competitive forces that might either put us at an advantage or a disadvantage? So there's a wide range of information that can be used to be doing predictive analytics, and that data can also be used when we're doing the performance evaluation and the audit analytics, trying to identify threats that are on the horizon, trying to look at whether the data that are represented in the financial statement are reasonable. All of this has been automated, and so we can now generate information and analyze and predict to much more narrow windows of time. Rather than having to wait for a fiscal year, we can be doing smaller and smaller analysis down to, in some organizations, they're trying to forecast what demand will be so that they can change what their staffing levels are almost in real time. And so we're going to see the accounting cycle is speeding up because of the breadth of the data that's available, and accountants need to be able to turn that data into meaningful information about not only revenues, but all of the activities within the organization. And that's going to be happening on an ongoing basis. And so as the time periods are shrinking, we've got to be predicting the next little wedge of time as we're evaluating the performance of the past. So accounting isn't just about producing the audited financial statement. It's really about performance measurement. And so if we think about big data, which is being adopted and embraced by sales divisions, marketing, supply chain, really we still have these four elements that somebody needs to be evaluating. And accountants are excellent at being able to help develop performance measurements, emerging performance measurements, using big data because they understand incentives. Who in the organization has the most incentive to overstate a forecast or to understate some sort of a cost that's coming up? They have real experience in understanding the trade-off between reliability and relevance. So when we think about the veracity of big data, we have to constantly be looking about how much uncertainty is there, how reliable are those big data elements, and then how relevant is the decision that's being made. They're doing this with an understanding of, within their professional judgment, is a professional skepticism. That accountants, good accountants, have skepticism and are constantly reevaluating the measures that are being created and how they're being used within the organization. So because of having hundreds of years of experience with performance measurement, accountants really understand the implications of the key elements that make big data different from little data that we've had in the past. And so I hope with this quick introduction, you're sitting back and saying, wow, accounting really is big data. And if you'd like to learn more and join the conversation, we have a new website that's rolling out called accountingisbigdata.org. And I encourage you to go there, review the materials, and join the conversation. For American Accounting Association members, you'll be able to get the videos from the whole meeting that we had in August, and we look forward to seeing you at upcoming meetings.